Good morning and welcome. I think today's session in particular will have great interest because over the last week or so there has been some monumental changes and giveaways in many ways, if we can call it that, by the government here. We're also joined this morning by Aidan Scollard to give us a viewpoint in terms of what's happening in Ireland. It being a different jurisdiction, there is also different ways and means of funding that's available in Ireland, and we're going to hear some of that through Aidan as well this morning. It's great to see you again. It's great that we've had this portal as a means to keeping you up to date in terms of communications. We've kept this very relevant in terms of the changes that have taken place in terms of furlough and other areas, and we will continue to do that. And I'd like to thank Martin Mockler for his input in that regard. He sent some very useful information that we have circulated to our membership recently. And if you haven't received that, you can contact Laura at bita.ie and she will send you on same. So good morning, Martin. Good morning, Aidan. Martin, I'd like to start in terms of, there's a summary and a list here in terms of what has happened. But if you could just take us through some of the changes that have taken place, and we'll go into them in depth as we go on.
No problem, Paul. Good morning. And so another bazooka-sized announcement by the Chancellor of the Exchequer, Rishi Sunak, who is in the job less than 6 months. We talk about baptisms of fire, but this has been a remarkable introduction for him. And I think the consensus will be by most observers that he's done really well. Some very novel schemes, generally developed and implemented in quick order. So, and really no difference to his statement on the 8th of July, the summer statement, where he announced about £200 billion worth of additional supports. So in addition to what's previously announced, it looks like that's going to be a price tag of 350 billion so far, and only just reached the halfway point of 2020. So these are remarkable numbers. And time will tell what the impact will be, but certainly so far the really highlight scheme, the furlough, has been, from an employee's perspective, a success. And it's obviously tapering off over the next number of months. We'll finish in October, but that's the one that grabs most of the headlines, and there's been some sort of changes to that as well last week. So do you want me to, have you any questions, Paul, from the...
I want to start on the furlough area for starters, because, I mean, that's an area that people kind of understood in terms of the benefits to businesses. But furlough now is changing at the end of July. So the first thing I want to ask is, in terms of those changes, what are the changes in the furlough that changes from what we had and we were used to? When does that change take place? And, what impact does it have on a business in terms of their contribution? And the burning question is, there was a giveaway in the Chancellor's packet that was something to do with £1,000 per person. So if I am taking someone and continuing furlough, the question is that impacted on that £1,000, and how does that work? So there's a lot of questions there, but let's start in the area of furlough at the moment.
Okay, fine. So yeah, so that was a new development that was announced last week, the job retention bonus. Essentially, that's an attempt by the Treasury to ensure that as many people as possible will come back off furlough and come back into the UK workforce. Now, it's accepted that a significant number of those people who are currently furloughed, unfortunately, will potentially exposed to the risk of redundancy. So the Treasury is trying to minimize that number. So what they've decided to do is, any employee that has been taken back off furlough and remains on the books of the employer, so retained on PAYE until the end of January next year, 31 January 2021, the employer will receive a bonus of £1,000 per employee. Now, that there are some certainly there are some terms and conditions we're aware of at the moment. There may be more that will be released. The main one being that between the period when the furlough scheme ends, which is the end of October, so from the 1st of November to the end of January, they have to earn at least £520 per month, which is a relatively low bar. And if that is the case, and they're still on VAY at the end of January, the employer gets £1,000. Now, you know, the cynics would say that potentially that will just move the cliff edge back from October to January, and the employers will make the redundancies in February. To be honest with you, £1,000 per employee isn't a hugely exciting number. So the consensus opinion is that that may not have much of an impact. For example, Primark. So we all love pennies. Primark, the owner and the ultimate owner, Associated British Foods, have said that they're going to waive their entitlement to this job retention bonus. So pennies would have been entitled to £30 million under this scheme. And they have already brought back all of their workforce. So they've said they're happy to not claim it. Now, so I think it's a less relevant figure for bigger companies, and for smaller companies, like unless your employees on very low wages, I think the redundancy decision won't be changed by this new job retention bonus. So to a degree, I think it's helpful, but I don't think it's going to have a big impact. In terms of the scheme itself, Mr. Sunak has certainly said that it's going to end in October. He said that several times. He's trying to not create an October cliff edge by introducing the bonus, but the reality is it ends in October. So from next month onwards, employers will have to make a larger contribution to the employee's pay and pay an element of the national insurance and pension contributions. So what that means is that there's some real costs starting to kick in now from the 1st of August onwards, and that's focusing people's minds. And the anecdotal evidence we have seen is that HR lawyers who specialize in redundancy are having a busy July so far, because really most employers have been locked down since the tail end of March. So they have visibility on who they probably want to keep and who they can afford to make redundant, or who they have to make redundant in some cases. So I don't think employers are going to wait until the end of October to make redundancies. They're going to happen starting August, we suspect.
Okay, and just to clarify, in terms of the £1,000, when does that £1,000 kick in? Does that kick in as soon as people bring the employee back from furlough, or does it kick in at the end of January 30th?
Yeah, we don't have the date yet, but it's certainly going to be in February 21. It's not until the end of that period, until after 31st January 21. So it'll be a claim by the employer to HMRC.
Okay, we have a question here. I am a partner in a quantity surveying partnership, which is very busy during lockdown, but we recently lost a large contract. As we are not a limited company, are we still able to apply for the Civils or Bounceback loan? If so, when does that scheme expire?
Okay, so good question, because most people assume that the supports relate to limited companies. And the Civils loan does relate to a limited company, but the Bounceback loan does not. So, for example, small hairdressers, quantity surveying partnership, as in the case of that individual there, they can apply for a Bounceback loan. That scheme started later than the rest because it was a bit of an emergency funding scheme as a result of the delays in releasing the Civils money. So that scheme actually runs until the 4th of November 2020. So essentially the answer to the question is yes, they can apply for funding. It would have to be a Bounceback loan because they're a partnership, but they have until the end of November. The maximum they can receive under the scheme is £50,000. That's subject to them having a turnover in excess of £200,000, so 25% of turnover, up to a maximum 50 grand. And there's some other basic terms and conditions, but not very much. It really is, I've said here before, it's the closest thing we're going to get to helicopter money in the UK. The interest rate is 2.5% fixed. It's a 6-year term. For the first year, the government pays the interest and the arrangement fee, so there's no cost to the company, or the business rather. The business can repay the money in full at the end of year 1 and suffer no cost whatsoever. And then if they retain the money for the full 6 years, they pay interest, as I said, at 2.5% over the remaining 5-year period. And one of those small points for anybody attending who has a limited company but hasn't yet made an application for a CBILS loan, that scheme runs until the end of September. So 4 November for the Bounceback loans, but 30 September for the expiry of the CBILS loans.
Okay, I have another question then, which is relating to, obviously, we heard about the stamp duty and the impact that this might have in stimulating the construction industry in particular, which is great. This question pertains to that. My daughter is purchasing a flat to live in London at £520,000. So what stamp duty will she pay, as I heard the rate has reduced? Okay,
good question as well. It's called stamp duty land tax in the UK. They rebranded it a number of years ago. So that individual, the individual's daughter rather, at present will pay £1,000 stamp duty on a purchase of 520 grand. That's a very significant saving. Historically, as a first-time buyer or a second-time buyer, they would have paid £16,000. So essentially, the first £500,000 of property purchase is exempt from stamp duty. So in this case, the cost is 520 grand. And so only 20 grand is applicable for stamp duty, and they're paying 5% of that 20 grand. So £1,000. So it's an interesting exemption. It runs until the end of March next year, so 31 March 2021. By the way, there are lots of varying deadlines when these schemes drop off, so it's worth making diary notes as to for each individual support measure. But this one runs to March next year. It also applies to landlords and people buying second homes. Now, that is a bit controversial because the government introduced a surcharge of 3% for anybody buying a house or a property in the UK that isn't your main residence. So the 3% additional surcharge still remains for people buying a property that isn't their main residence, but that's a lot lower than landlords would have faced in the past. So for example, if this individual wasn't buying the property as a main residence, if it was an investor, historically they would have faced a stamp duty rate of 8%, and that's reduced to 3% on the first 500 grand. So big saving, targeted, as you said, Paul, at sort of house building and construction. It has had an immediate effect. Agents have said that they are inundated with potential purchasers. Interestingly, a lot of them investors who have really been sitting on their hands for the last 3 or 4 years because of the higher rates of stamp duty. So yeah, I think it's a very positive measure. The reality is that the Treasury were not receiving any stamp duty land tax anyway because the number of transactions were stagnant. So this is a shot in the arm. It may assist in terms of sort of playing catch up. They won't have any significant tax receipts coming in, but they will generate activity, which is the objective of the exercise. And that's one other point that I would like to mention. That the emphasis of this statement, even though it wasn't a budget, it's almost like a mini budget, was to protect jobs initially, and that's reflected in the sort of the furlough related announcement, and to support and create jobs. And again, that's reflected here in the stamp duty announcement, to try and generate activity and all the associated income that relates to a property transaction, the solicitors, the sort of house movers, the DIY merchants, etc.
Okay, this goes back to the furlough again, but I just want to clarify a couple of points on this. I own a construction company and we've had to furlough 12 employees, of which 2 unfortunately will be made redundant. Will I still be able to claim the job retention bonus for £1,000 for the remaining 10? Or do I get disqualified if I've made some redundant?
Yeah, so the answer is no, they're not disqualified. The bonus relates to each individual employee that remains on the payroll. So again, just very brief recap. Hard to believe that we have a measure on the watch of a Tory government that has 9.5 million people being paid to stay at home. You just have to remind people that the magnitude of this measure. So 9.5 million people are at home and they're not working. Some are obviously brought back at this stage. Those that will be brought back will all qualify, so the employer will qualify for the bonus on a per person basis. So if this business makes 2 people redundant, they obviously can't claim for those 2, but they can claim for the remaining 10. Now, this scheme potentially could cost the Treasury up to 9.5 billion. Simple maths, £1,000 by 9.5 million people. But it's not going to, because there are going to be redundancies, as I mentioned earlier on. Still, an eye-watering measure. And to be honest, as I mentioned earlier on, I don't think this is going to be the criteria that makes an employer decide to keep someone on payroll or not. I think this is possibly a measure that they're not going to get much bang for the buck in the Treasury, but nonetheless, they've decided to wheel it out. So yeah, so the answer is he'll qualify and he can claim 10 lots of £1,000 bonus come January, at the end of January 2021.
Okay, in terms of training then, we've spoken about training in the past as one of the ways to create some funding within the period of lockdown. And a lot of companies utilize that, and we had a session from Geeson Training that was very useful in that regard. I believe there is news in that regard as well in terms of the apprentices. Can you actually explain a bit about that to us?
Yeah, I can. Again, like a lot of these announcements, there'll be more meat on the bone come the end of this month. But we do have a picture as to what they're trying to do in relation to training. I will qualify this by saying that you probably should speak to Geeson if you want to dive into this in more detail. But the headline is that there are 3 new measures that are, again, looking to support and create traineeships and apprenticeships. So the first one is called the Kickstart scheme. Now, that is focused on and targeted at young people aged between 16 and 24 who are currently on universal credit. So these are people who potentially could end up as long-term unemployed. So again, Treasury want to make sure there isn't a hard core of youth unemployment that is a residual sort of impact of the lockdown and the recession that we're in. So essentially, if an employer takes an individual on a 6-month contract, the government will pay all of the cost of that individual up to the minimum wage, including the employer's national insurance and the pension contributions, the auto enrollment contributions. So what that means is that essentially the government will pay £6,500 effectively for to the company for any individual that is on a work placement for 6 months. So that's a lot of money, and this is going to be an expensive scheme if it's taken up. Really, it's as I said, that the objective is to get these people into the workplace, even if it's for 6 months, just give them some experience as to what work looks like. If some of them haven't worked before, school leavers, for example, who left in May or June of this year, it's very, very difficult for this tranche of sort of individuals because they don't have experience in an office. It's very, very difficult to start a new position on Zoom if you haven't worked before and understand how an office works, the dynamics of a workplace, etc. So this is targeted at those individuals. I think it's a commendable scheme. I think the objective is really to be admired. I think it will work to some degree. I think the question is going to be what happens, like all these things, at the end of the 6-month period. Is there a job for these individuals, or will the employers just decide it's a good source of cheap labor for 6 months? Again, the cynics would say that may be the result of it, but really so much depends on what the economy will look like in 2021. And nobody, including the Chancellor, has a crystal ball. So the idea is to try and stimulate some activity, get these people into the workplace, and keep Treasury keeps its fingers crossed that a good percentage of them will stay there. So that was the sort of the headline. There was 2 other announcements related to that. So traineeships. So if an employer takes on a trainee, again same age bracket, 16 to 24, the company will receive a payment of £1,000. And they're trying to really ensure that they upscale that age bracket, that it's extended to include level 3 qualifications. So the idea is that not only are these people coming into the workforce, but they can be trained as well. And the third element then is for new apprentices. So it's structured slightly differently. If the apprentice is aged up to 25, the company gets a bonus payment of £2,000 to, and they obviously claim that from the Treasury. Now, interestingly, that's in addition to an existing support measure pre-COVID-19, where they receive £1,000 payment. So at the moment, a company would get £3,000 if they take on an apprentice aged under 25. If the apprentice is over 25, then the subsidy is reduced to £1,500, plus again the original £1,000 that pre-existed. So good incentive. Companies will. There is a significant skill shortage in the UK. There has been for 4 or 5 years, particularly in construction. There are no chippies, no brickies, no plumbers, no sparkies coming in to the supply chain. So it's hoped that this will be used by a lot of employers across every sector, but particularly construction, because there's an acute shortage developing in the sector. Now, there are other measures as well that were announced. For example, for the coaches to be sort of housed in job centres to sort of mentor people when they're coming in, etc. There's a range of smaller measures which are all going to be of value. But the 3 big ones I've outlined, and the biggest one in terms of the potential cost, is the Kickstart scheme.
Very good. Noel Byrne from Ireland Tide has joined us this morning, and he's a question: will you have to claim for all of these, or will they be automatically credited to qualifying companies? Yeah,
good question, Noel, and that's one of the questions that we don't have an answer to yet. We should know by the end of this month. It's quite possible that HMRC will allow you to offset these claims against your monthly PAYE or CIS contributions. That's what we suspect will happen. We don't yet know. As I said, the Chancellor has indicated that by the end of this month he'll put more detail on around these schemes, so we will know then.
So just to take a break from and give you a chance to draw your breath, Aidan Scollard, you've listened to a range of measures, a range of initiatives that the government put forward here. Can you give us an identity in terms of what the Irish government are thinking, or what indeed the European fund that's forthcoming will have for the Irish economy?
Yeah, I think the Irish government followed or had a number of similar proposals as the UK government. So we've had a temporary wages support scheme here. So furlough has not applied here in Ireland. Instead, it's been a wages support where the government have been initially paying 70% of lower paid salaries, and then they moved that quite recently up to 85%. Up to a cap. So effectively, a lot of companies have been getting €410 per week, effectively as a non-repayable grant, which has enabled an awful lot of companies to continue to keep the connection with their employees. Temporary wages scheme continues until the middle of August, so it will continue until the 12th of August. Potentially may extend to a later date thereafter for certain sectors, because obviously the big sectors that have been affected are those ones around hospitality and tourism, and there's a raft of measures likely to come in for them. We haven't had an emergency budget or a spring statement, but instead we're expecting some announcements within the next 2 weeks as the EU funds become available. And probably the biggest ones that have happened so far have been supports around the ability to apply for loans, where effectively the government are guaranteeing up to 80% of a loan of 500,000. So effectively you proceed through the normal arrangements and you apply to your bank. You first apply to the SBCI, which is a government agency. They give you a ticket number as such, and then you apply to your bank as normal. And for loans up to 500,000, and they are unsecured, and the government effectively is securing those in the background to the bank up to 80% of the value. The intention, I think, is in the next 2 weeks is that those loans will become even easier to get, because they are quite tricky. They're having to go through the normal credit process. But I suppose the hope for most SMEs is that the application for the loans will become easier, and that the government will likely 100% guarantee these loans. So effectively, that should mean the ability for SME owners to take on, I suppose, loan facilities in order to keep their businesses going without the potential of taking on additional personal guarantees. So there, I suppose, one of the, or a couple of the big areas. The other piece that the Irish government has, I suppose, introduced here is what's called tax warehousing. So if your business ceased to trade or had to shut down due to the lockdown period, then for the period from when you closed up to 2 months after you reopen, you can effectively warehouse all those tax liabilities and bundle them and not pay them until next year. So for most companies, what this is meaning is if they cease to trade in, say, the middle of March, the government are allowing them for their, say, January, February VAT, March, April, May, June, all the way to probably through to July, August, because a lot of companies are only starting now. They can bundle all those VAT liabilities and also any other tax liabilities, so payroll taxes, out to 1 year from that point. So maybe out to the start of next September. They get a low rate interest on that. They'll only have to pay 3% on that money to the revenue, and they will get a repayment period of 2 years in order to make those payments. Now, obviously, in the interim, as they start up again, you'll need to make all your payroll payments and your VAT payments as normal, so say from September onwards. But this has been a very useful one for people to keep cash flow within their business. So for a lot of businesses, if they've started to make sales again, or they're starting to receive monies from previous sales that they've made, they're effectively able to hold on to all of this tax revenue and all of the VAT money and use that within their business. The issue here has been that because of these support payments, I mean, you talk about the numbers unemployed or in receipt of support in the UK, 9.5 million. We've had nearly 1 million people on either supports through the temporary wage scheme or the pandemic unemployment payment. And if you look on a scale basis, I mean, that'd be the equivalent of, say, 15 or 16 million people being unemployed in the UK. So our sort of impact has been quite high to date. Pandemic unemployment payment has applied at a rate of €350 per week. So somebody who has been let go, as opposed to keeping that connection to the employer, has been receiving €350 per week all the way through. And there's been a slight anomaly there in that a lot of part-timers have probably done better since they've been let go by their employers. So that has recently restricted just as of last week. And if you previously earned less than €200 per week, your pandemic unemployment payment has now dropped to 203. So effectively there's two rates, 203 per week or 350. The government is intending to bring in a raft of measures. They're under pressure, similar to the UK, to maybe reduce the VAT rate and to encourage the hospitality and the hotel trade in some way, because I suppose it's anticipated that if there are not more supports in that area, even allowing for people staying here on staycations, it's unlikely to be enough to keep a lot of people going in that industry and could lead to wholesale unemployment. So that's the issue that the government is going to try and address very quickly, and we expect quite a, well, maybe not quite the giveaway as the UK, but quite significant support in the next 2 weeks.
One of the areas that's a serious problem at the moment and inhibiting the kind of the flow of business is the restriction that we have in place in Ireland in terms of people coming from the UK into Ireland and going into quarantine for 2 weeks. When do you see this being lifted?
Well, the government had promised initially to make an announcement on the 9th of July, and they've now deferred it to the 20th, which is next Monday. So the anticipation is that they will have some so-called green zones or green routes, and with those countries on which have a lower infection rate than Ireland, people will not need to quarantine when they come in. So that's the likely intention. It looks like that's going to apply to UK and a lot of mainland Europe.
Okay, so back to Martin in terms of, and Aidan alluded to it there, was the VAT changes and the impact that the VAT changes will have on the hospitality industry in particular. Could you take us through some of those changes, please? Yeah,
so what the Chancellor has announced is a reduction in VAT for businesses operating in the tourism and hospitality sector. So essentially, the rate is dropped by 15% from 20 to 5%. Now, it's for 6 months until the 12th of January 2021, another important date for sort of hotels and restaurants to have in their calendar. So the interesting point is that there's no obligation on the businesses to pass on the VAT rate reduction. So, and that's a little bit controversial, but you know, you can see the likes of Wetherspoons and KFC coming out in front of that and announcing that they've reduced all their prices to reflect the rate reduction. So that means a saving of 12.5% on any expenses incurred in that sector. So now the important point to note, I mentioned Wetherspoons, but it doesn't apply to alcoholic drinks. So it's food sales in Wetherspoons that it's going to apply to. So it's novel. It's going to probably help for sure. The issue is going to be there are small operators who were in this sector who obviously got some initial supports, but have had no income essentially at all from the end of March, and they're trying to replenish their balance sheets. So a lot of the smaller guys probably won't pass this on, or will pass a small element on, because they need to try and stay alive and stay afloat. Social distancing measures mean that they can't operate at capacity. So time will tell. It's certainly it's a positive measure. It'll be interesting to see what happens. Certainly, anybody with a large brand seems to want to get out there and say that they've passed it on, generate activity. There was a sort of secondary measure announced at the same time, which is called Eat Out to Help Out, which again is pretty novel. So for the month of August, next month, if you eat out on a Monday, Tuesday, or Wednesday, you can claim a voucher of £10 from the restaurant, up to a max, well, 50% of the meal, up to a maximum of £20. So essentially £10. So you go into your local restaurant, you have a meal, it's £20 per person. There's two of you there. It would normally cost you £40. It's going to cost you £20 instead. Again, it's not going to apply to alcoholic beverages, but it does apply to restaurants and applies to hot takeaways, as does the VAT reduction. So the likes of, as I said, KFC, Burger King have made some announcements about this as well. Yeah, it's a sector that's really borne the brunt of the lockdown, because most other sectors could do some element of work, albeit at reduced levels, whereas leisure, hospitality, and tourism really have had the doors shut and are sort of limping forward from here.
Well, after the Monday, Tuesday, Wednesday, I sincerely hope that the gym's open on Thursday and Friday and that we're able to work that one off. So otherwise, we're going to have another problem. On a total different front, I'm confused about the new work placement and Kickstart schemes that have been announced. So can you explain the difference between those two, please?
Yeah, well, as I mentioned earlier, the sort of Kickstart is the main event, which is focused purely on people who are currently receiving universal credit. So these are individuals who are signing on. They are in the 16 to 24-year-old bracket, and this is an attempt to give them work experience. It's quite likely that a lot of these people will end up back on universal credit 6 months later, but it's really to try and mitigate the risk of having a long-term element of unemployed in this category. So the other schemes, the traineeships and the apprenticeship schemes, are people who are really coming into the workforce on a long-term basis. The idea is these people will be part of the team going forward. The incentives are there to not only encourage employers to take them on board and engage them on PAYE, but also to train them and upskill them as well. So there are three separate measures. One of them is targeted at what potentially would be long-term unemployed. The other two are focused on people who are coming in, but maybe incentivizing employers to take these apprentices on sooner than they may already do, with a bonus payment up front.
Okay, back to you. Sorry, Martin, continue.
No, just that Aidan mentioned earlier on, which is interesting. The Irish government took a different approach. They decided to obviously pay a wage subsidy essentially, and keep the employees active insofar as possible. And that is interesting because in the UK, they took a different route, which we're fully aware of, the furlough scheme. What is interesting is the number of employers that we're aware of that have asked staff to come off furlough, and the employees have been quite disgruntled at having to come back into the workplace. They've got used to spending their days in the pajamas watching Netflix or whatever it might be, or some daytime TV. I also know another example of a client of ours who apparently, we didn't mention it here earlier, but you're probably aware of the self-employed subsidy, this SCISS scheme, where the sort of labour-only subcontractors were able to claim 3-month subsidy, which a lot of them did. But a lot of them then decided that they'd use this as a sort of holiday fund and bugger off to wherever they were from in some cases. And lots of anecdotal evidence of a significant lack of Eastern European hod carriers in North London because they've all had their SEISS bonus and they're partying somewhere. So obviously there are going to be unintended consequences of some measures of this size and scale rushed out in the time frames. Yeah, just a link. The other point I was going to mention was similar to the Irish government, the UK allowed a VAT holiday for 12 months. So any VAT that was due to be paid to HMRC from March until the end of June is deferred until the 31st of March 2021, and there's no interest payable. So the company has the use of those funds in the meantime. Again, it creates a bit of a cliff edge. There'll be some significant cash flow challenges come 1st of April next year when any company, which is most companies in the UK, avail of this deferment because they have to pay that in addition to normal taxes due around the same time. But yeah, sorry, I interrupted you there, Paul.
No, it's all very interesting. There's so much into it at the moment, and what's been very interesting about today's debate is that the inclusion of the Irish side, and it's very interesting to see how it correlates and what changes take place that are similar in both regions. So on that note, Aidan, there's a new government in Ireland. What impact does that new government have to things like construction in particular? Do you envisage, because historically, Fianna Fáil as a government, and I'm not getting political for obvious reasons, but as a government, they did build out. Is that going to happen again?
Yeah, well, I think the intention is, especially in the housing sector where there's a real demand at the moment, there's likely to be quite an input of funds towards social housing, especially. So the government has committed that it will assist around that. Again, it is another area that it's under pressure, possibly to reduce VAT. Unlike the UK, most purchasers here don't realise that when you're buying your new house here, you are paying VAT at 13.5% on the purchase. So that's quite an earner for the government. There has been suggestions of reducing that to say similar, maybe 5% as in the UK. But obviously the government tax take is quite good from that. So the pressure will be there. But most governments do tend to like to invest in either infrastructure or construction projects because it keeps the circle of that money moving around the economy. I think probably one of the things of the shutdown over the last while has almost been like a mini economics lesson for most consumers, in that they realize now that they are back out and maybe able to shop again, the impact of their money circulating around the economy, keeping local businesses or keeping larger businesses going to keep their neighbours in employment and keep the whole economy moving. I think that's been quite a lesson for people as to how quickly it can stop when people stop spending. We've got evidence of a couple of clients now that are in construction related supplies and also house improvement supplies, and some of them have had their best month, in the last 2-3 weeks, because people who've been staying at home haven't been spending money. Some of them have been on this pandemic unemployment payment, or they've continued to receive their full salary because the government here has been paying either 70 or 85% of their salaries to the companies. So therefore the companies have continued to pay them in full. So those people haven't really seen a blip, or maybe not too much of a blip, in their household cash coming in. That's accumulated, and now I suppose the issue is to try and get them out there spending it again, not to keep their hands in their pockets on the basis that they think they're going to be made unemployed, because if they do keep their hands in their pockets, that is what's going to create that situation. So it'll be a self-fulfilling one. That's been one of the interesting things here, is the wages support scheme here, unlike the UK, where it has actually kept the connection between employers and employees and enabled employers to continue to get employees to work. Now, obviously, it works in a lot of instances where the staff member can produce work on a remote basis, and if the IT and all the other services have worked for staff, then that has worked. But I think the government have probably found that a better way to keep companies trading, rather than, I know the furlough scheme, where we've had some clients and they're saying the issue has been not being able to get staff to work then as a result of it's furlough or work. It's one or the other.
Okay, thank you. One final question in from Martin Mockler. Is corporation tax deferrable?
The answer is there is no automatic deferral. However, HMRC are being very relaxed if you request a deferral under the time to pay arrangement. So during the sort of Great Recession, 2008-9, HMRC devised the concept of a time to pay arrangement, and it can range anything from 1 month to 1 year or longer if required. So in most cases, in fact, every case, we've approached HMRC for a deferment, whether it's corporation tax or payroll taxes, etc. They have said, no problem, we'll defer by 3 months. Can you get back to us and update us the position in 3 months' time? So there's almost an automatic 3 month deferral, but you do have to apply first, because if you don't apply first, there's a potential penalty if it's not paid by the due date. So yeah, speak to your advisor, who will be able to contact HMRC or contact the time to pay team directly.
Great stuff. Well, listen, Martin Mockler, Aidan Scollard, thank you very much for a very good session this morning, very informative, and I'm sure people will benefit. Those of you who have joined us, thank you very much for joining us. Those of you who haven't and are going to view it later, you can view this on bitacommunity.org. So thank you very much again, and we hope to see you all soon.
Thanks, Paul.
Thank you, Paul. See you soon.
Bye-bye.
Bye.